Most people get their first $1,000 saved and then do absolutely nothing with it. It just sits in a checking account, losing value to inflation every single day. Today I'm going to show you exactly what to do with your first $1,000, step by step, so it actually starts working for you. Welcome to the Wealth Brief, where we break down money, investing, and wealth building in a way that actually makes sense. Let's get into it. Before you invest a single dollar, you need to make sure you have a solid financial foundation, and that starts with one thing: an emergency fund. I know you want to invest it, not save it, but here's the truth. If you invest your last $1,000 and your car breaks down next month, you're selling that investment at a loss to cover it. The whole point of an emergency fund is to protect your investments from life. So step 1, make sure this $1,000 is money you genuinely won't need for the next 6 months. If it is, great. Let's keep moving. Step 2, open a brokerage account. If you don't have one yet, the two best options for beginners are Fidelity and M1 Finance. Both are completely free, both have no account minimums, and both make it incredibly easy to get started. I'll leave links to both in the description below. Avoid anything that charges commissions per trade. It's 2026. You should never be paying fees to invest your own money. Once your account is open, take 10 minutes to set up your profile, link your bank account, and verify your identity. That's it. You're now an investor. Step 3. Take $500 and put it into a total market index fund. The two best options are VTI or FSCAX. This single purchase gives you ownership in over 3,500 US companies all at once. This is the Warren Buffett approved strategy. It's not exciting, and that's exactly the point. Money that's boring tends to grow. You're not trying to pick winners. You're buying the entire market and letting it work for you over time. Index funds have historically returned an average of 8 to 10% annually over the long term. That means your $500 doubles roughly every 7 to 9 years without you doing anything at all. Step 4. Take your other $500 and put it into a Roth IRA. A Roth IRA is a tax-free retirement account, which means every single dollar you put in grows completely tax-free. No taxes when you take it out in retirement. Think about what that means. On just $500 invested at age 25, compounding at 8% annually, you'll have over $10,000 by retirement without ever adding another dollar. The contribution limit for 2026 is $7,000 per year. If you're under 50, that's your ceiling. Max it out every single year, and you're building serious long-term wealth on autopilot. Now let's talk about what most people get wrong. The number one mistake new investors make is waiting for the perfect time to invest. They watch the market go up and think it's too expensive. They watch it go down and think it's going to keep falling. The truth is, nobody, and I mean nobody, can consistently time the market. Not hedge fund managers, not Wall Street analysts, not anyone. The data is clear. Time in the market always beats timing the market. Every year you wait to invest is a year of compounding you can never get back. The best time to invest was yesterday. The second best time is today. The second biggest mistake is checking your portfolio every single day. When you're new to investing, watching your portfolio go up and down feels stressful. You'll see a red day and want to sell everything. Don't. Markets go up and down in the short term. That's completely normal. What matters is the long-term trend, and historically that trend has always been up. Set your investments, check them monthly at most, and let them grow. Treat your portfolio like a bar of soap. The more you touch it, the smaller it gets. Step 5. Automate it. Set up a $50 to $100 automatic monthly transfer into your brokerage account or Roth IRA. The secret to building wealth isn't timing the market, it's time in the market. Set it, forget it, and let compounding do the heavy lifting. Every month you automate is a month you don't have to think about it, and a month your money is quietly growing in the background. If you increase that monthly contribution to $200, $300, or $500 as your income grows, the numbers become life-changing. At $300 a month invested for 30 years at 8% annual returns, you're looking at over $400,000. That's the power of consistency. Let's look at a real example. Say you're 28 years old. You invest your first $1,000 today and add just $100 every month after that, at 8% average annual return. By the time you're 58, just 30 years from now, you'll have over $163,000. That same $1,000 sitting in a savings account at 2% interest would be worth just under $1,900. The difference between investing and not investing over 30 years is over $160,000. That's not a small number. That's life-changing money, built from a $1,000 starting point and $100 a month. So let's recap. Step 1. Make sure your $1,000 is money you won't need for 6 months. Step 2. Open a free brokerage account on Fidelity or M1 Finance. Step 3. Put $500 into VTI or FSCAX index funds. Step 4. Put $500 into a Roth IRA. Step 5. Automate $50 to $100 in monthly contributions and increase it as your income grows. Avoid timing the market. Stop checking your portfolio every day. And remember, the best investment decision you'll ever make is simply starting. If this helped you, subscribe to the Wealth Brief. We drop new videos every single week breaking down exactly how to build real wealth step by step. Links to everything I mentioned are in the description below. I'll see you in the next one.